So if you are just tuning in, remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So we had the Bitcoin futures chart. Obviously, nothing has really changed here on the Bitcoin futures chart. Basically, the rundown is as follows. We have been above the 200 exponential and simple moving average for the entire trend, going back literally the last few years. They have been in an uptrend. We obviously topped out at least temporarily at 70,000. Since then, we broke down below the 200 exponential and simple. At that point in time, right around the end of 2021, December, we basically flipped the 200 exponential and simple red. So the slope is now to the downside. We are below both of those moving averages, and we know that that confirms we are now officially in a bear market. We had an attempt to retest and try to reclaim that level. That is our reversion to the mean play. It was rejected. We came back down, put in a lower low, or I'm sorry, a higher low, and then came back up and attempted once again to break through it. And then this time we put in a lower high. So we have a higher low and a lower high. We came down once again to that same level, bounced it back up, and now we've put in a lower high once again. So as far as I'm concerned, right now, what we're looking at is basically a continuation pattern. So this is a, don't mind all the random stuff on here. This is a bearish pennant. We have basically a lead in, a leg down. Then we have a consolidation period that forms a pennant with lower highs and lower lows. I'm sorry, lower highs and higher lows. And then eventually, typically what happens is this pennant will break and then we will continue to the downside. Often the leg will be similar in size to the lead in, which was basically that move from 70,000 down to, 37,000. So now, does it have to be that long? Could it be less? Could it be more? Of course. But as far as I'm concerned right now, we're very clearly in a bear trend. We're below the 200 exponential and simple. They're sloped to the downside. Before we can ever move back to the upside, one thing needs to happen. We need to cross the 8 and 21 back bullish. So we need another green cross like this. Each time that happened, we got rejected on the next series of moving averages, came back down, came back up, crossed it, got rejected once again, and now here we're coming back down. So if we break down below this level right here, which was the 37,600 level, that tells us that we're seeing extreme weakness because we're no longer putting in higher lows. We're breaking that range, which essentially is the move that's taking place as we film this. So basically a breakdown below this level of, like, let's say 37.5 is going to be a lower low than these previous, this is our third touch on that horizontal support line. So a move down after that is probably going to take us down to our next swing low. So we may see a little stop off at this little bump right here, but more likely than not, we're going to retest the low right here at 35,530, which was our closes, or in this case, the gap down open, right back here, which was our low since the 70,000 top. So that is our next key area to pay attention to if we break down from the current level that we're at right now. So as far as I'm concerned, like 37,500 is defense. Then after that, the defense is 35,500. And then if we lose that level, we really need to accept that we're probably coming back down to 30,000 to the previous swing low here. And those are like, the last areas of support. If we break down from those areas, we probably see, a confirmed, very long, drawn out bear market, and essentially retrace the previous multiple years of bull market. Now, at this point in time, as far as I'm concerned, we have already confirmed into a bear market. It is always possible to reclaim key levels and continue to the upside, but there is literally nothing on this entire chart based on technicals that tells us crypto will be going to the upside. There's absolutely nothing. As a matter of fact, everything is pointing to the downside right now, with the exception of our daily TJD TD MACD, which still has technically momentum to the upside. Although we're seeing only red histograms, or more red histograms than green, we have broken back down below the zero line, but we do still have a positive slope. So that is literally the only thing. And this is also obviously the longest, laggiest of all the indicators we're using, basically just telling us, are the moving averages converging or diverging from each other? Is the trend accelerating to the upside or to the downside? And then telling us when the trend is, in a strong momentum case. So in this case right now, we've been consolidating for so long right here. This indicator and also our shorter term moving averages are the least reliable because we've basically just been chopping sideways. So it's important to just focus on where we are in relation to our longer term moving averages and the slope of them, which again is pointing us down. Now we also have a hard sell signal now on the TJD Jewel Thief. So we had a sell right here, then we had a buy, then we had a sell again. this is technically a divergence signal, but they're spaced out a little further than I like to see technically. But the last time we had the hard sell signal was basically, left the bullish control zone, got the hard sell signal, and it left that jump right there. And then we got basically a buy here at the top, which was a false signal. And then we broke down again from that. We obviously are not going to take a buy, into resistance. We do the opposite. We sell resistance every time. We buy support every time. So now we're selling again. We're getting a hard sell signal again, as this move is playing out at support. So we don't want to necessarily be going short here at support. We should already be positioned for downside or neutral potential. But if it breaks, then we're essentially looking for continuation to the downside. And because this pattern is inherently bearish, it breaks to the downside 66% of the time. We know that there's a much higher probability of continuation to the downside than there is move to the upside when the pattern breaks. However, we could very easily find support here one more time and have another pushback up here to another lower high. So we don't want to get overly bearish right now, because this is how you trap people. You trap them with a fake breakout to the upside or a fake breakdown, and then you just move back inside the range. Now, at this point in time, the range is not like ridiculously big or anything. We're basically trading inside of what amounts to, well, it's still not bad. I mean, it's roughly a 17% range. So if you took a short right here and then we bounce up 17%, it's going to be awfully uncomfortable, especially if you're using leverage. As opposed to if we break down from here, a 17% move to the downside, is going to take us to much lower prices and be, very clear what's happening. So that's why we don't want to short a pattern before it breaks, unless we're shorting from resistance or buying at support for a short-term scalp trade that develops into a longer positional trade. So in my opinion right now, technically the support is still holding. Now, depending on what time frame you look at and what asset you look at, we have technically broken down for now. But on shorter time frames, it's much less reliable. So while I do expect continuation to the downside, don't want to get overly bearish now, because we could easily just pop back up, similar to the move that we did on like March, 7th, when we had that push back up. It looked like we had very much broken down from support. It looked like we were going to see this continuation to the downside. And then we immediately basically push back up inside of that range. So, and then again, you can have this drawn different ways, but here on the daily, we can see a very clear support line right here that we're starting to violate. But again, we still have, 20 plus hours until we would confirm below that. And then if we go down to the 4 hour, we have this drawn a couple of different ways. But essentially it looks like we're breaking down from that level already. But again, before we start to close below it, we could easily just push back up. So I'm not particularly bullish on crypto, obviously, nor have I been for some time. Does not mean there's not scalp trades to be made. But as far as I'm concerned right now, everything is pointing to the downside. And when we zoom out, when we look at our longer time frames, we know that last week's close was extremely bearish. We had another horrible weekly close, another rejection, multiple rejections off the 8 and 21. And we know that previously what happened here was when we broke back up and saved the trend, we basically had a powerful move back up above the 8 and 21, and then we could start rallying to the upside. So until we start closing anything above 43,655, there's absolutely no reason to get bullish. So people say, well, yeah, but there's a hard buy, and last time we had the hard buy and we came out of the bearish control zone, we went on a massive rally. Sure, there was last time, and that's completely possible that happens again. It's also very possible that we see this blue stochastic cross back to the upside and then immediately just curve straight back to the downside, and it crosses straight back bearish again, and then people just get absolutely wrecked. So that's why you have to be paying attention to support, resistance, and momentum. We obviously have no momentum. The histograms are all red and to the downside. The slope is all red and to the downside. So people who say, well, I'm buying because something's oversold or it's at low levels or, something like that, I just don't buy into it. This just shows us the bears are very much in control. The bulls have showed a tiny bit of life while the price went nowhere. And now we're getting a hard buy signal. That looks like a false signal to me. Obviously we'll see in time, but I don't see anything bullish on the weekly. And then the monthly time frame, we will look at this actually on the Bitcoin Bitstamp chart, but we're basically closing down here. I shouldn't say closing down here. We're halfway through the month, and we're basically down at the bottom of the range, bearishly engulfing the previous candle. So we had 3 bearish candles in a row. We had a pathetic bounce back up to the 8, got rejected, and then we bearishly are engulfing it at the time. of this video, and then we're basically holding support on the 21. So if the 21 breaks, we would expect further continuation to the downside. And obviously momentum all to the downside here as well. So now let's switch over to our Bitstamp chart and we can look at, a little more history. So here again, very bearish, 200 exponential and simple, both pointing to the downside. We're breaking down below that support right here. This one looks a little bit more bearish of a break as of now. We do still have the blue slope on the TJD TD MACD, but our red histogram has broken down below it. So it'll be a little time before it flips back over red. But we see previously it acted as support. It acted as support. We actually front ran it and got some support. And now we're breaking down from it. We're seeing a bunch of red histograms in a row with a single green one. The bulls are nowhere to be found. Nowhere to be found right now. And we know, obviously, we talk about it all the time. But when we're in an uptrend, we take the stairs up and then the elevator down. And then the stairs up and the elevator down. And it's the opposite when we're in a downtrend. When we're in a downtrend, we take the stairs down, meaning we slowly just grind to the downside, and then all of a sudden we have the elevator just shoots us back to the upside. And then we just grind back down to the downside, and then the elevator shoots us back to the upside. And then we just grind back down to the downside, and then eventually we break and we just keep grinding to the downside. So it's the opposite of what you see in a bull market. In a bull market, you grind to the upside, just consistently going up day after day after day, and then you have one sharp retrace. Everybody gets scared, and then day after day after day, you keep grinding to the upside. And that's the difference between the actual trend. It doesn't give you an opportunity in either trend to get in and out of positions if you're positioned for the wrong way. So that's why they call them like face ripper rallies in a bear market, or, face ripper like corrections in a bull market, because it happens all at once. And if you aren't already positioned for it, it's too late by the time it happens, and you're stuck in that position. Now, if you're positioned in the direction of the trend, it's not a big deal to be positioned in, against one of those pushes. Because if you have a 10 or 15% correction opposite of your position, sure, it sucks short term, but the trend is in the direction of your overall position. So eventually you're going to make higher highs or lower lows. But the problem is when you're not positioned correctly, and then one of those happens. So the people that buy into something like this and take a long in this position, and then we never go back to that price again, or long right here, and then we don't go back to that price again, they end up stuck in these positions and keep feeling the pain, and then eventually the capitulation happens and we'll break down from a key support level. So again, let's look at our longer time frames, but we know obviously this is very bearish, looks absolutely terrible. So if we look at the weekly, we see again, we're just getting rejected week after week after week by the 21 moving average and the 8 moving average. We can't get a close above the 8, and we're literally getting wicks up to the 21 and rejected. So we know for a fact, in order to even be slightly bullish, even the littlest bit, the tiniest bit, to have any sense of a bull trend or bullishness whatsoever in these markets, we need to absolutely close above 39,400. So until we get a daily close above 39,400, anyone that tells you this is bullish, we're in a bull trend, honestly is brain dead. They're actually a brain dead person, so they're probably not able to use their speech. But if we do close above then, we could gladly, easily push back up to the 21. If we close above the 21 at 43,260, keep in mind these are moving targets, so a week from now these numbers will be different. But if we close back above there, we can begin to switch the 821 back to the upside and potentially get a cross back up. And then we can say, okay, on a daily time frame, we're at least short-term bullish because we have the 8 and 21 crossing back to the upside. Until then, anyone that says otherwise legitimately has brain damage. And then on the weekly chart, obviously here, we have a pretty clear support. If we lose this support we're at, just like we talked about, we're looking at 36,114 on spot markets, or else alternatively, we're looking at 31,600 on spot markets. And then we know realistically that when we break down from this, typically, we will come back down and retest the 200 exponential and simple. So we're still looking at targets of around 26,300 or 20,600. Now, obviously, we were in the bearish control zone for some time. We have left the bearish control zone and are close to getting across to the upside. Again, this could easily cross the upside. We see continuation, reverse the trend. We go to new all-time highs. The circle jerk crypto fest is back on and everybody's winning. More likely what happens, though, is we probably just move back up here and then get some sort of rejection either right before or right after the cross, and then it rolls back over. And then this was just what I like to refer to as a bearish reset. The bearish reset being the indicator oscillators will start to move back to the upside while the price action goes sideways. So we gain no value in the asset, but the indicator oscillators cool back off and now are able to continue in the direction of the predominant trend, which is obviously down. A bunch of red histograms are showing some signs of green right here, but there's no price action. We haven't moved. We have declining volume basically since our previous top back here. We had another spike in volume on the sell-off here, and then it's just turning absolutely pathetic. So, and then if we look back in time and we look at what does this sort of remind us of, well, this was our blow-off top from 2017. This is a double top from 2021. Similar, they're just different types of topping patterns. One, basically you have two pushes up and then sell off and go into a bear market. The other one, you just have one very aggressive push up and you get like a V top. This one is basically just two V's or two rounding tops, or a combination of a rounding top and then a V top, as where this is just one more aggressive V top. So either one is just as reliable, and typically, probability of a top looking like that is equally probable. The only difference is people tend to talk about and remember V tops more because they're more aggressive on the way up and more aggressive on the way down, as where, a grinding sort of rolling over or double top tends to happen more slowly and, over a longer period of time. But it gives you that false hope on the second push up. So it traps a lot more people, in a different way than a V top traps you. Now, keep in mind, though, once the 821 crossed to the downside right here, we were never able to get back above it. We had a couple little pushes right here, but never able to actually cross the 821 back to the upside. And then, went into a long, prolonged, downtrend sell-off. Here we had an initial cross back up and we're able to actually save it. And then here we're getting another cross back to the downside. So again, like I said, until we actually cross the 821 back to the upside on the daily or the weekly, until we turn the 200 exponential or simple back to the upside on the daily, there's no reason to be bullish on this asset, because we know at least short to mid term on a daily or weekly basis, we're bearish. Now, in a long enough time frame on the weekly, you're like, yeah, but Bitcoin only goes up. Sure, that is 100% true. If you ever bought Bitcoin on the weekly, it has constantly been in a uptrend based on the 200 exponential and simple, and you have always won over time. That is definitely true. But if you got trapped right here when Bitcoin was at $12,000 roughly, or somewhere around, here when it was at $9,000, how long were you in pain for? Could you take the pain? Did you need the money that you had invested or that you had speculated with? Because we took a 65% drop to the downside, and until we started to close back above that level for a long, consistent amount of time to where we were back in an uptrend, it was 875 days. So for 2.5 years and a max drawdown of 65%, that's all you have to go through. So if you can go through 2.5 years and a 65% drawdown from that point, and you're comfortable with that, that's perfectly fine. There's nothing wrong with saying we're in a bullish uptrend on the weekly, so I'm not selling. I'm a hodler. That is perfectly fine and acceptable. And based on history of Bitcoin, you'll probably be fine. Probably. But most people probably don't want to take a 65% paper loss and wait 2.5 years to just get back to break even. So could you do something better with that capital in 2.5 years? Would you sleep better at night if you weren't down 65% in your position? Are you going to say diamond hands for the first 2 years and then all of a sudden we drop 50% and you're going to capitulate like a little bitch and sell your position? I mean, somebody did. Most people did. So, I mean, just as long as you can sit down and say, in those scenarios, I know how I'm going to handle myself. I'm fully prepared for them mentally and I'm willing to accept that. Then, you're fine. But just be prepared. Walk those scenarios through. Talk about them. Put them in your head. What's my wife going to say when she hears from, people at her work that Bitcoin is down 85%, from its all-time high, and some of the altcoins are scams and went to zero, and the devs stopped working on them, and, all of our savings that we tied up in crypto is now down 75%, and we were leveraged up, so maybe it's wiped out all the... Just take into account those scenarios and then fully think them through and think, should I de-risk? Should I be fully invested? Do I definitely believe in come rocket? Like whatever your situation is. So here, if we look at the monthly on the Bitstamp chart, what does this look like? Let's look at our 2017 top once again and see if this looks familiar. So we break down, find some support temporarily at the 8. We eventually lose the 8 on the monthly. We then start retesting the 21. We then get jammed. We get a log jam here between the 8 and the 21. Sideways, sideways, sideways forever. The entire crypto market says, this is it. We're holding. We're consolidating. We're going to new all-time highs. Everybody's going to get left behind. This is it. 6,000's holding. The bottom is in. Time to go to the moon. And then what happens? A 50% drop in a single month, complete capitulation. And, people give up. They quit on crypto. They talk about how crypto is a scam, a Ponzi scheme. Just remember, that's exactly what happened. So now let's look at what's happening right now. Well, we broke down to the 21. We can't get back above the 8. And now we're consolidating in a tightening range. Okay? So if this holds, what's the next probable scenario? Well, we probably just go back up to 42,000. And then if that holds, what's the next probable scenario? Well, we probably just go back down to 38,000. And we just keep going sideways here until what happens next? Well, probability says we break to the downside. So, is it possible we go to the upside? Of course. There's always going to be a % chance that we break to the upside, invalidate the probability, and, we win. We go up. That's it. But in order for that to happen, we have to close back above the 8. The same way that in order for a breakdown to happen, we have to close below the 21. So do I want to take my chances right now and potentially risk that 50 to 65, or if you're in an altcoin, 99% drawdown from current prices? Well, that's up to you. I can't tell you that. You have to make up your own decision. But we know we're in a bear trend. We know we have the hard sell signal. We know we have the stochastics, strengthening to the downside. And I say strengthening to the downside because they're not just kind of going down. We see the short-term stochastic, the blue stochastic, is going down aggressively. It's getting further away. It's diverging. See here, we broke down and it was getting further and further away. And then now look, it started moving up while the purple one was moving down. They started to converge, move towards each other, lose momentum to the downside. And then what happened? Well, fake breakout, false breakout, throw over, trap. And then what's happening now is we're strengthening to the downside. So we're going sideways, but we're strengthening to the downside. So what does that mean? It gives us an even higher probability of a break because the bulls are dead. There's no more bulls left. The bulls are all poor people that have no money left, that are all in and they're just praying for an uptrend. There's no actual bulls. If there was, we would see people buying crypto and the price would be going up. We know for a fact that there's more people selling crypto than there is buying it, or the price would be going up. Instead, it's going down. Now it's kind of going sideways, but sideways to down. Here we have a bunch of red histograms in a row, no green histograms for 4 months now. So it's been 4 months since we had a green histogram. And since that, we had 2 green histograms, a red one, a green one, and then 3 red ones after that. So technically, we have not been bullish on the TJD TD MACD on the monthly since April of 2021. So we're coming up on a year of not being bullish. And it's only looking worse. It's legitimately looking much worse. And we obviously have bearish divergence on price action and our indicator oscillators, not only on the weekly, but also on the monthly as well. So we literally have everything pointing to the downside, based on like actual math and statistics and everything. But I mean, if you want to believe in prayer, then yeah, sure, we're bullish on Bitcoin prayer. But, I've prayed quite a bit. I've been in some rough situations before. And, the truth is, maybe at least measurably, you never actually like pray. And then when you stop praying and you look down at your hands, there's like $100,000 and you're like, it worked. You might like grind and go to work and invest and make good decisions. And then eventually you're like, man, that prayer really paid off. Thanks, God. But like, was that prayer? Was it hard work? Was it luck? I mean, I don't know. So it's hard to measure prayer. I'm not saying that if we don't pray hard enough, Bitcoin doesn't go to the moon and we don't all live in the golden Peter Schiff, Citadel skyrocket on Mars. But I mean, I wouldn't count on it. I wouldn't invest in it. So Ethereum looks like total trash. Looks very much like trash. Even less bullish than Bitcoin. Barely able to just hold the trend. All the momentum is pushing to the downside. We do still have the blue slope line right here, but looks absolutely terrible. Putting in new lows. The moment we break down on Ethereum below 2,400, we go much, much lower. And when I say much, much lower, we have some support along the way. So Slinky theory in full effect. Probably take like 2 steps down, 1 step up, etc. But essentially, 2,300, something like that. Probably closer to like, under $2,000 is what I expect. So if we zoom out here and we look at our basic Fibonacci's, we know the 236 is at like $1,900. So that's what I expect. And we know that this is trading very technically. We know we broke down from a giant channel that we've been inside of, an ascending channel that we were inside of since March of 2020. So we were in this channel forever, above the 200 exponential and simple in a clear bull market. And then we broke down from that channel. We lost this key horizontal support right here. So now everything is bearish. Everything is bearish. We're below 200 exponential, below 200 simple. Everything pointed to the downside. So, I'm not trying to be mean, but let's just remember, crypto looks like trash. So Bitcoin dominance, obviously we have crossed the 821 to the upside on the weekly Bitcoin dominance chart, telling us that Bitcoin is gaining strength in relation to, the other, whatever it is, 20,000 shit coins with like 3 outliers that are actually decent projects. We're in a very clear descending channel. We have triple bullish divergence pushing to the upside, everything pointing us to the upside. We are still in a weekly downtrend, very much below the 200 exponential and simple. But it looks like we're going to get some sort of potential reversion to the mean play. Now, I do expect eventually a push up here to 45%. I would expect some resistance there. But overall, we know that when this switches to green, it's going to look similar, very similar to our situation that took place in 2018 after our previous bull market top ended. So again, we're seeing a lot of things lining up, pointing us and telling us the exact same situation is happening. We're gaining momentum. We have the blue slope line to the upside, all green histograms above the 0 line, hard buy signal coming out of the bearish control zone, triple bullish divergence, Stokes angled powerfully to the upside, and the 821 cross. So more likely than not, we retest our first resistance at like 45. We have a couple more resistances along the way. Eventually, we get the measure move around 52%, and then finally a retest of a 200 exponential and simple, which I would assume would get rejected at about 57% before we come back down and eventually put in a higher low. Obviously a lot can change since then. This is a weekly chart, but Bitcoin looks like it's going to hold its value much better than the rest of the crypto market. So does that mean Bitcoin breaks out to the upside and altcoins underperform, but everything goes up? Does it mean that Bitcoin goes up and altcoins go down or stay the same? Does it mean that Bitcoin goes down, but altcoins go down much, much faster? Any one of those scenarios could play out, but we know statistically, we know probability tells us that when crypto market is bullish, that alts outperform Bitcoin based on percentages because they have lower market caps, because they're more speculative, because they have cheaper dollar values, etc. So based on just that and the correlation of those two things, we can tell that a bullish Bitcoin dominance chart, at least in the short term, tells us probably that crypto is going to go down. Crypto total market cap, again, we see bearish divergence. We topped out at the 1.618. This is our weekly chart. We're very much below. This looks exactly like the Bitcoin chart. Bears are in full control. The bulls are absolutely dead. The 8 and 21 across the downside, all red histograms, red slope line. Crypto looks like trash. So Solana basically just pushing back down, still just slowly grinding lower. So again, trend is clearly to the downside as long as you are positioned accordingly, with the exception of random pops to the upside. Still very much headed towards our target, which would give us an eventual $72.68, which is our key Fibonacci level that we're paying attention to, the 0.5. We made it down to the green box once. We pushed up, got rejected at the 382. I fully expect us to make it to the bottom of the green box and our actual Fibonacci target of 72.82, at which point in time we can reevaluate. If it has an aggressive move to the upside, I would expect a retest of 99 from that point. If it has an aggressive move to the downside, I would expect a 0.618 test, which is $54. Solana, technically still the 200 simple is like flat slope right here. It hasn't yet flipped to the downside, so it's not technically in a bear market yet. But a lot of that has to do with just how powerful the short-term bull market was. But to tell you the truth, Solana doesn't look good. The cult has faded. Avalanche, once again, because it doesn't have as much of a time frame, we don't technically have a 200 exponential and simple, but we know the 8 and 21 are to the downside. We know that this support has failed. We know the potential trade setup that we looked at and the potential move up to the top of the range has failed. And at this point in time, we would expect lower lows. So we touched down, obviously, once already, the 886. We had a wick come down to the 786. It looks like we're very much on the way to the 786. We are very close to, no, we have actually confirmed a daily below the previous high right here. So the next level, the most important level we need to hold on Avalanche is $59.85. If we get a daily close below $59.85, this will look absolutely horrendous. We have a high, we have a low, we have a lower high, we have a lower low, we have a lower high, and we're headed down here to potentially put in another lower low, which is what we would expect because clearly we're in a downtrend. This looks terrible. It has essentially wiped out the majority of the move to the upside. Anyone that bought in at $51 is still sitting pretty. Anyone that didn't sell when we were at $150 is wrecked because we're at $67 right now. And more realistically than not, eventually we're going to head back down here and put in a lower low. So I would expect full continuation to the downside and Avalanche to get absolutely decimated. Now, granted, the thing was like, you know, in the pennies a year ago. So, Matic, but most people didn't buy it when it was in the pennies. They bought it when it was at $100+. So there's a lot of selling pressure. Matic looks pretty bad. It is basically closing lower lows now. So this is our new lowest low on this thing since we peaked out, essentially, confirming into a bear market. Still kind of squeezing into this wedge at the 0.5 right here. So could it have a possible pushback up to like $1.50, $1.48? Sure, it could, but more realistically than not, Matic probably headed to $1.12. It is picking up a little bit of momentum right here, but again, we've been kind of chopping sideways so long. This is much less reliable. This is for overall trend more so than it is for like a, you know, a shorter term kind of move like this. When we start consolidating in a range for this amount of time, this becomes very unreliable because it tends to like chop around and we see like false signals where it'll turn blue or red but not hold that trend. Luna still consolidating towards the top of the range, still one of the strongest looking cryptos based on technicals. Don't have any idea what Luna is. I still haven't looked into it. So it could be complete trash. It could be absolutely amazing. I honestly don't have any idea what it is. I don't know anything about the market cap. I don't know anything about circulating supply. I don't know anything about the white paper marketing campaign that they're running. I literally have no idea. But it does look better than pretty much anything else. Now, it potentially looks like a double top, so we have to be very careful. But it is at least towards the top of the range and well above its 200 exponential and simple. They both still have slopes to the upside. Now, what I'm seeing here on the daily, as we identified, whatever, a few days ago, last week, we have a high, then we have a lower high right here, and then we have a high right here that corresponds with it, and we have a lower high right here. We see the same thing on the stochastics as well. Perfect example of when it looked like we're going to curve back to the upside, and then we see a rejection. Well, that's our high. That's our lower high. So we have some very clear daily bearish divergence taking place between these 2 points. And then again, if we look at this point right here in our previous peak, which was basically our, you know, it's essentially a double top. This one is slightly higher. If we look at those peaks and we look at this peak is higher, this peak is lower. So we have bearish divergence between these two peaks as well. So we have micro bearish divergence on the daily. We have macro bearish divergence on the daily. So what does that tell us? Well, when this thing sells off, it's probably going to get wrecked. So if we see it break down below $82, it's probably going to be in some trouble. If 77 holds, that will be okay because at least we'll be holding this low right here. But in all reality, I would fully expect this thing to come back down and be in the 60s in the very, very near future as it retests the 200 exponential and simple once again. Now again, if it holds a higher low and holds the 200 exponential and simple, that will look bullish, and it is much more bullish than the rest of the cryptos in the space, at least any of the ones that we've looked at for now. But keep in mind though, these are very, very correlated to each other and also to the stock market. So the likelihood that one crypto would stay very strong while all the other ones get absolutely wrecked and decimated and race each other to zero, not very likely, but it is possible. Again, I don't know anything about Luna, so maybe it's something really good that, like, you know, helps like homeless children or, you know, puppies that are hurt or homeless. I mean, I don't know. Maybe that's what it does. So maybe it just goes bullish forever, but I literally have no clue. So theta is next. Broke down from our descending triangle, obviously a bearish pattern. We got a breakdown, retested the bottom of the range, got to push back up, got rejected here. So we basically have a break, a retest, and now we expect continuation to the downside. We are temporarily holding for now at this level, very clear horizontal support. After we break down from that, which seems very, very likely, I would expect this at $1.58. We are at $2.69 now, so that is quite a move to the downside. We also obviously see a descending channel. We have found some very clear interactions with the heartline of the channel as far as resistance and support, and now here it is acting as resistance. We have one touch on the bottom of the channel right here. We have multiple touches on the top of the channel right here. So it seems pretty reliable based on the heartline and the top of the channel. We don't have a reliable bottom, but it seems like we have it in the right place. So again, that lines up basically with the 382 as well. So I think it's very likely that that is in fact our next move, but that when we do get there, that it holds. But again, there is an argument to be made that we're actually not in a channel, that you could actually have something closer to this, like sort of a little bit of a wedge, which would be slightly more bullish maybe. Probably about the same, honestly, but maybe has a lower target for the next move down. But again, I would trust the horizontal supports and the Fibonacci levels much more so, especially when we see how clear interactions we have had with the Fibonacci's on the entire way up. And then again, on the way down, it's very clear that this market makers, algorithms, bots, aliens from outer space, whoever's trading theta is very clearly looking at the exact same thing we're looking at, which is this is in a bear market and it's in the middle of a Fibonacci correction and it got rejected at the 236 after attempting to reclaim it, and most likely the next target's a 382. So, whoever's trading this, probably looking the same thing we are. So that's all I have for the cryptos today. So just make sure you remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So let's